that relates specifically to the entity while providing no indication of the complexities relating to the entity or the audit. So, with these complexities and increasing in judgment and uncertainty, so the users of the financial statement felt that just only the audit opinion, which is pass or fail in an exam, just the pass or fail, whether you have passed the exam or failed the exam, which is the see something from the auditor's point of view. What auditor has considered as most significant as far as the current year audit is concerned. Why they consider they as such matters as most significant? How they have addressed those matters in the audit. So basically, giving specific information about the entity audit from the auditor's point of view as opposed to standard audit report which we had in the past. Now probably those days the audit report was one page. If you take John Keel's holding audit report or audit report of a privately held entity, you don't see anything. But of course, with the introduction of key audit matters, which is mandatory for listed entities audit reports, in certain cases, we see audit report goes to 7 to 8 pages even. 7 to 8 pages even. So that is, the main reason why the auditor reporting standard were revised. Since auditing is a profession that goes about its work behind the scenes, investors and other financial statement users have demanded more transparency and insight into the audit. In essence, what they said was, don't just give you a pass or fail statement, give us something specific to the entity. The ISSP worked to develop new auditor reporting standard respond to this goal to provide more entity specific and relevant information in the auditor's report, which set the foundation for future of global auditor reporting and improved auditor communication. Strong drive for investors to enhance the auditor's report, to gain insight into the entity through the lens of the auditor, from the auditor's point of view, not from the management point of view, not from those charged with governance point of view. Less boilerplate language, more entity specific information. Interested in key areas and outcome, not detailed audit procedures. So I will explain these things. Greater transparency in the auditor's reporting regarding the name of engagement partner and ethics requirements. So there is a, in Sri Lankan context, there is a deviation. So I will explain that. So these are the main reason. I hope you are clear. So with these complexities and increasing in judgment and then the corporate failures, we have experienced throughout. So what happened was when we see the audit report was a clean report, unmodified opinion. But now if you take even Enron, the last audit was for year 2000. They had a clean opinion. Even the WorldCom, again, it's a clean opinion. Even the Satyam computers in India, they had, the auditor has issued an unmodified opinion. Then if you take Wirecard, again same thing. In most of the situations, the auditor reporting, the audit opinion was an unmodified opinion, whereas within shorter period of time, the entity is in trouble. So that's why actually the give us more information from auditor's point of view rather than standard boilerplate language in the auditor's report. Now these are the expected benefit of the new auditor's report: enhanced communicative value to users. So how we achieve this communicative value? Basically reporting key audit matters in the independent auditor's report, which is mandatory for listed entities and voluntarily other entities can adopt if required. More robust interaction and communication among users, auditors, and those charged with governance. So these things you will understand how this more robust interaction comes. basically there is a thought process to be followed in reporting key audit matters, right? So as we go along, you will understand certain things what we discuss now. Increase attention by those and management and those charged with governance to the disclosures referred to in key audit matters section of the auditor's report. Now we have to understand what are key audit matters. The process to be followed by the auditor in determining which matters are to be reported as key audit matters, right? We will discuss increase professional skepticism in areas where cams are identified. Increase professional skepticism in areas where cams are identified. So we know what is professional skepticism, which is having a question in mind, being alert to conditions which indicate material misstatement in the financial statement. So in the fraud standard, I explained professionals, which is an attitude each and every auditor should have professional skepticism, but that doesn't mean that you approach an audit with a foregone conclusion that there are mistakes. Whereas the professional skepticism means having a question in mind, being alert to condition, corroborating audit evidence, right? Then increase audit quality or users' perception of audit quality. That is to basically to reduce the audit expectation gap. So as we go along, we will discuss that concept as well. So the same thing, improved relevancy of the audit, enhanced communicative value, improved audit quality and professional skepticism, clarity of responsibilities and improved understanding of the audit, stimulate more robust interaction and communication between an auditor and the entity. That means the management and those charged with governance. Enhance prepare focus on key risk and disclose. So the aims of the changes to the auditor's report, insight. So we have to keep in mind. So the main thing is to increase. These are the main aims of the revisions to the auditor reporting standard. Insight to describe those matters that in the auditor's judgment were of most significant in the audit of finance statement of current period. So that is actually the key audit matters to provide an insight into the organization, to describe those matters that in the auditor's judgment were of most significance in the audit of financial statement of the current period. In fact, this refers to key audit matters. So we will discuss the what are key audit matters, the thought process to be followed in determining which matters are to be reported as key audit matters, and then what to be reported under key audit matters. Then transparency to introduce an explicit statement regarding auditor's independence. First one is insight. Insight means from the auditor's point of view. From the auditor's point of view, what are the matters that are considered to be most significant in the audit of the financial statement of the current period, which we call key audit matter. Then transparency to introduce an explicit statement regarding auditor independence. Now, even before these revisions, auditors are supposed to be independent because in the heading of the auditor's report, we call independent auditor's report. If the auditor is not independent, he or she cannot do an audit. It was already there in the audit, in that was an expectation. Auditor must be independent. But under these revisions, to give more weightage and more emphasis on that, to enhance the transparency, there is a explicit statement in the auditor's report regarding auditor's independence in all report and identify the engagement partner name. Now, what is expectation from international auditing standard, not for the privately held entity, but listed entities, the audit report should have the engagement partner name. So the audit report will be in the letterhead of the respective practicing firm, right? And then for listed entities audit report, as per the international auditing standard, you have to have the engagement partner's name. Engagement partner's name. But Sri Lanka has deviated from this requirement. In Sri Lanka, instead of the engagement partner name, we give the engagement partner CA Sri Lanka membership number. I will show you all an audit report. Basically, in Sri Lanka, you will have the membership number. That's all. We don't give the name. Then readability. To provide a restructured report that puts the audit opinion and entity specific information first. Earlier, if you see, the opinion was given the last, but now you give the audit opinion. That is because users still value that pass or fail statement. This is the pass or fail statement. You see, because whether binary pass or fail statement mean it's basically audit opinion. So they still value that, and it is given first. Basically, the at the beginning of the audit report, just to know whether it is a modified opinion, it is a modified opinion or an unmodified opinion. So these are the three aims at broader perspective. One is insight, to provide from the auditor's point of view what matters from the auditor's judgment were considered to be as most significant as far as the audit of the current period, which we call as key audit matters, and are mandatorily required to be disclosed in the independent auditors report. Independent auditors report. Then transparency, giving an explicit statement regarding auditor's independence, but auditor was supposed to be independent even before these revisions. But now it is coming in writing. And identify the engagement partner name. In Sri Lankan context, we don't disclose the engagement partner name. Rather, we disclose engagement, respective engagement partners, Sri Lanka membership number. If you go to any listed company audit report in Sri Lanka, you will see only the membership number. Then readability, the audit report has been structured first and then put the audit opinion and the entity specific information first, because still, despite the call for the revision of auditor reporting standards, still the users value binary pass or fail statement, right? Key features of the new auditor's report. Audit opinion required to be presented first. Key audit matters required for all listed entities, but there is no restriction. If the, let's say now a privately held, group like Brandix, MAs, Hela, or if you consider, Hydramani or any other company, if they decide we need to report key audit matters, there is no restriction, but the mandatory requirement is for listed entity. Going concern, additional focus, which we discussed last week. Other information, enhanced work effort, and new section. So I will explain that when I go through the audit report. Enhanced description of auditor responsibilities and key features of the audit. Statement about independence and ethical responsibility. Explicit statement, which is coming under what? Under transparency. Engagement partner name for listed entity, but in Sri Lankan context, we don't give the name, but we actually give the engagement partner CA Sri Lanka membership number. So the changes in the auditor's report, the opinion paragraph is at the beginning of the report. Presentation and discussion of key audit matters, as well as why they are considered to be key audit matters. Going concern, expanded description of management and auditors' responsibilities for going concern. Specifically, it is given why it is considered very important, but in the current context, the assessment of going concern by the management and then auditor concluding whether the management use of going concern assumption is appropriate is a key consideration. Then, as well as a new requirement to evaluate whether the financial statement provide adequate disclosure when events or conditions have been identified that cause significant doubt, even if the auditor conclude that there is no material uncertainty. Then independence, so which we already discussed, identification of the engagement partner name, general enhancement to the existing wording and structure of the audit report, where permitted or required by the territory policy in the particular country, voluntary disclosure of matters related to audit approach such as audit scope and materiality. In Sri Lanka context, we don't disclose. Description of the auditors and management response in expanded and more comprehensive, unlike in the previous standard. Other reporting responsibility and other information. So I will explain what do you mean by other information and then the requirement. Now this is basically the difference between the previous one. Now you see you have the management responsibility. Auditor's responsibility basis for opinion and opinion. So this is basically just one page report. Now of course you have the basis for opinion, then basis for opinion that include the explicit statement about the auditor's independence and compliance with the ethical requirement that is coming under transparency, the material answer regarding going concern. So I hope you all can remember, uh, we have to give when we conclude that there are events or conditions that cause significant doubt about the entity's ability to continue as a going concern, but despite these events and conditions, the use of going concern assumption is appropriate, but a material uncertainty exists, and the required disclosure about the material uncertainty is provided in the financial statement. In that case, we are giving a matter paragraph on going concern. So I hope you all can remember. Then key audit matters, which is required for listed entity. Then other information. Other information refers to any information other than the audit report and the financial statement. In a set of annual, if you consider annual report, you have corporate governance disclosure, chairman review, management commentary, CEO review. Then you have risk management disclosure, industry analysis. All that are basically considered to be other information. Then management responsibility, auditor's responsibility, then you have the auditor's signature, date of the auditor's report, and then the auditor's address. So this is basically the standard. This ISO 700 revised deals with the auditor responsibility to form an opinion on the financial statement. It also deals with the form content of the auditor's report issued as a result of an audit of financial statement. ISA 701 deals with the auditor's responsibility to communicate key audit matters in the auditor's report. ISA 705 706 deals with how the form and content of the auditor's report are affected when the auditor expresses a modified opinion. Now, if you see, ISA 700 is basically unmodified opinion, or we call it unqualified opinion or a clean report. 701 is CAM. 701 is the modified opinion. 706 is including an emphasis of meta paragraph and other meta paragraph in the auditor's report. So this is basically the structure. Now this ISA 700 revises the unmodified opinion. What do you mean by an unmodified opinion? In our opinion, the financial statement provided true and fair view of results of operation and state of affairs as at the given date, or as at the statement of financial position date, in all material respect, provided true and fair, or in other words, financial statement have been prepared in all material respect in accordance with the applicable financial reporting framework. So unmodified opinion is the best opinion a client could receive from an auditor. Unmodified opinion, which is, in unmodified opinion in an audit we express, uh, it provides a reasonable assurance, which is a high level of assurance but not an absolute level of assurance. I hope you are clear. So under unmodified opinion, we provide high level of assurance, but not an absolute level of assurance. An unmodified opinion is express. So see, the objective of the auditor are to form an opinion on the financial statement based on an evaluation of conclusion drawn from the audit evidence obtained. So under the risk-based audit approach, so as per the auditing standard, we are required to follow the risk-based audit approach. Under the risk-based audit approach, auditor perform risk assessment procedures and identify risk of material misstatement and then design audit procedures which are responsive to the assessed risk of material misstatement in order to obtain sufficient appropriate audit evidence. Sufficient refers to the quantity, whereas appropriateness refers to the relevance and reliability. So once the auditor obtain audit evidence, auditor has to form conclusion based on the audit sufficient appropriate audit evidence obtained. Then to express clearly that opinion through a written report that also describe the basis for that opinion. Now, at which point an auditor is expressing an unmodified opinion, we call it unqualified opinion or a clean report. The auditor shall express an unmodified opinion when the auditor conclude that the financial statements are prepared in all material respect, not in all respect, not in all respect, which says in all material respect because the in auditing we consider the materiality. In audit report, we in an unmodified opinion we can express the opinion either the financial statement provide a true and fair view, or in other words, financial statements have been prepared in all material respect in accordance with the applicable financial reporting framework. We never see the financial statements are correct or accurate, which is giving an absolute level of assurance. Here, what we say is in all material respect, which means it's a high level of assurance, but not an absolute level of assurance. So that's why the auditor shall express an unmodified opinion when the auditor concludes that the financial statements are prepared in all material respect in accordance with the applicable financial reporting framework. It could be, Sri Lanka Financial Reporting Standard for SME, Sri Lanka Accounting Standard Full Version, or International Accounting Standard, right? So I cannot see any, text message or anything. Are you all clear with what I explained? Can you all hear me?
Yes,
Yes, sir. Yes, sir.
Are there any questions up to now? If there are questions, you can ask me, or else I can continue. But don't send the chat message because when I on the presentation mode, I cannot see them. There are no chat messages actually, but just I want to emphasize that. Are there any questions?
excuse me, sir.
Yes.
සයිසර කිව්වා ඔඩිට රිපෝට් එක සමහරක් වෙලාවට පිටු 7ක් 8ක් එන්න පුළුවන් කියලා. එතකොට
Oh.
ඒක නිකන් රිවිව් එන්ගේජ්මන්ට් ටයිප් එකට යනවද? ඇසයින්මන්ට් ටයිප් එකට යනවද?
No, no,
පිටු
no.
7ක් 8ක් එනවා කියන්නේ සර් අනිවාර්යෙන් බැලන්ස් ෂීට් එකේ P&L එකේ මොකක් හරි ඉම්පෝටන්ට් අයිටම් කැම් එකේ හරි අනිත් තරවල මෙන්ෂන් කරන එකනේ.
Oh, then
එතකොට සර්
Samanyan
ඒක
pages.
හරි සර් ඔව්
Okay.
ආන්සර් එක දෙන්න.
Right. Basically, pages 6-7ක් යන්නේ listed entity වල තමයි. සාමාන්‍යයෙන් privately held entity වල අපි key audit matters දෙන්න ඕනේ නැහැ. Mandatory requirement එක තියෙන key audit matters දෙන්න. මම ඔයගලන්ට පෙන්නන්නම් එක audit report එකක් download කරලා. key pages 6-7ක් යන්නේ ගොඩක්ම listed entity වල where the listed entity is a group of companies. Now අපි හිතමු LOLC holding කියලා. නැත්නම් Haley's PLC නැත්නම් John Keel's holding. දැන් ඒකේ දෙන්න ඕන key audit matters company දෙන්න ඕන. හරි consolidated financial statement වල තියෙනවානේ entity එකක් තියෙනවානේ group එකක් තියෙනවානේ දෙකම තියෙනවානේ ඒක දන්නවනේ. එතකොට කැම් දෙනකොට දෙනවා කම්පැනියට අදාළ කැම් තියෙනවා. කැම් එක අපි කතා කරාම තීරේ ඩිස්ක්ලෝස් කරන්න ඕනේ ඒවා. එතකොට මේ ගෲප් එකටයි කම්පැනියට ගෲප් එකට අදාළ ඒවා තියෙනවා. key audit matters. ගෲප් එකට විතරක් අදාළ ඒවා තියෙනවා. දැන් උදාහරණයක් ඇටියට impairment assessment on goodwill which is again significant judgmental area. I will show you some of the key audit matters today, right? So ඒක නිසා තමයි ගොඩක් වෙලාවට ඒක නිසා තමයි give me a minute, right? ඒක නිසා තමයි මේක pages 6-7ක් යන්නේ. එතකොට මේ දැන් අලුත් ඔඩිට් රිපෝට් එකේ ඔඩිටර් මොනවාද? ඔඩිටර්ස් responsibility, management responsibility ගොඩාක් expanded කරලා තියෙන්නේ. සාමාන්‍යයෙන් privately held entity එකක උනත් ඔඩිට් රිපෝට් එක pages 2-3ක් විතර යනවා. ඒ කාලේ එක page එකනේ තිබුණේ. නමුත් අර key audit matters include කරනකොට තමයි ඒකේ disclose කරන්න තියෙනවා why the matter was considered to be a CAM, key audit matters, how the matter was addressed in the audit, and reference to any disclosure in the financial statement relate to the particular CAM. Right? ඒක නිසා තමයි pages 6-7ක් යන්නේ. මම ඔයාලට පෙන්නන්නම් audit report එක. ඒතකොට ඔයාලට තේරෙයි ඇත්තටම pages 6-7ක් යන්නේ කියලා. දැන් ඒකේ advantages උත් තියෙනවා disadvantages උත් තියෙනවා. දැන් හැම change එකක් කරාට පස්සේ you see advantages and disadvantages and drawback එකක් ඉදලා තියෙන්නේ. දැන් pages 6-7ක් වුණාම මිනිස්සු කියවනවාද කියලා ප්‍රශ්නයක් තියෙනවා. හැබැයි the objective of reporting key audit matters in the audit independent auditors report to provide insight, to increase the communicative value, transparency, basically from the auditor's point of view. Now, if you go to this CAM, basically, to describe those matters that in the auditor's judgment were of most significant in the audit of financial statement of the current period. There is a process to be followed to determine what are most significant. Most significant. And then there are disclosure, there is a process to be followed in determining what are the matters that are considered to be most significant as far as the current year audit is concerned. And then the process to be followed in determining the key audit matters and the requirements, the disclosure requirement for identified key audit matters. ඇත්තටම මේක pages 6කට යන්නේ key audit matters නිසා. කාට clearද මම explain කරපු එක?
Oh, sir, clear.
Right. So, any other questions?
Yes, sir. Small clarification. Sir, you said that there is an exemption in engaging partners name reveal in Sri Lanka. You said that we only have to reveal the registration number. Then I think it is a matter to the transparency because how they assure the
That is
transparency.
actually no, that is basically just to because now if I give generally I sign the audit report under the firm name. That's the way we sign. But as per international auditing standards, still you sign under the firm name. But for listed entities audit report, you have to give the engagement partner name. Let's say if I sign the particular audit report, I have to give actually as per the international audit standard my name.
Yes.
HP, Vajralakti. But now Sri Lanka Chartered Institute has taken a different view. That of course I have no idea why they have taken that view. In Sri Lanka, we disclose only the membership number of the respective engagement partner instead of the name, which is a deviation from the international auditing standards. So I agree with you. It would affect the transparency to a great extent. Now, when I
Yes.
give my audit name, generally there is a kind of additional responsibility or burden on me to ensure that the audit report I issue is you know it's reasonable. I do have no, I'm not making any mistake. But in Sri Lanka
Yes.
context, that's the way how the CA has decided. The argument is, I suppose, if you have the membership number from the the institute, you can get the details of the particular member.
Yeah.
That is only
And
for an interested party.
yeah, I think sir, in the Enron case also there is a biggest mistake because they have some conflict of interest. So sometimes that made the point that they uh, stated that the engaging partner should reveal their name. But
Yeah.
in Sri Lanka, I think they gave more chance to do.
No, no, that I fully agree. Enron case was actually that particular partner actually had advice to shred the audit
Yes,
documentation also, and then they had many conflicts. Like now that's why you have this under transparency to give an explicit statement that the auditor is independent. So in the Enron, the total audit fees were about 52 million, and of which now I'm referring to 52 million in year 2000, of which actually almost half was non-audit fees. So
yes,
probably they would have. I'm not saying that they have violated the independence. So it's a practice for the statutory auditor to provide non-audit services, but we need to identify threats to independence, like there is a self-review threat, intimidation, all that, and then put safeguards in place either to eliminate threats or to reduce the threat to an acceptably low level. So that's
yes,
the requirement. So there is
yes,
no restriction of providing non-audit services by the statutory auditor, but we have to ensure that the independence is not breached. Now,
yeah.
that's why under Sabins and Oxley Act, there is a clear list of services the statutory auditor cannot provide. Now, if you consider in Sri Lanka, generally we provide non-audit services, but with
Yes.
safeguards in place. But there are certain things now we cannot do the bookkeeping and do the audit. Then there is a self-review threat that you cannot eliminate or reduce to an acceptably low level. In that case, you cannot provide. But
Mm-hmm.
there are certain situations that we are allowed. Now, tax compliance services, yes, we provide, but we have to ensure there is no self review threat, self intimidation, financial interest likewise. So we have to identify threats. So that's why each and every audit firm, they have statement of permitted services, but that doesn't mean that you can provide all permitted services, depending on the nature of the entity, whether it's a listed entity or a privately
Yes.
held entity. So likewise, you have to consider it's an evaluation of all these threats and see whether first is whether it is permitted services, and then what safeguards we can put in place. As an example, if we are doing some tax services which is provided by another team, not by the audit team. So likewise, you have certain safeguards either to eliminate the threat or to reduce the threat to an acceptably low level. So under transparency, so that's why there is explicit statement about the independence, because anyway the auditors are supposed to be independent. Otherwise, you cannot say no. In the heading you say no,
Yes.
independent auditors report. No, when if you are not independent, you cannot say. So even before these revisions, the auditor was supposed to be independent, but now
Mm-hmm.
you are giving explicit statement to state that basically in writing you are expecting. Now something, if you are going to tell verbally, oh it is
Yes.
generally accepted, no, but when you are putting certain things in writing, you take extra care, no? So that is what they are doing. So same way, the giving the engagement partner name is basically just you are putting an additional pressure on the person who is signing the audit report, because my name
Yeah.
is disclosed, but
In the
whereas
report.
Sri has deviated from that.
Okay. Thank you.
So any other questions?
එන්ඩරෝන් කම්පනයගේ කේසකට එක ඔඩිට ෆර්ම් එක ආතයන් මට නම්මතගෙන
Arthur Anderson.
ඒගොලන්
Arthur Anderson.
ආතන්ට සැගොන්ට රෙස්පොන්සිබිලිට ගියන්න එතකොටස
Oh,
දැන් ලංකායි ප්‍රමුඛ බැංකුව කලක්ෂුනම කේපට ප්‍රශ්නකුණේ නැද
මෙහෙමයි
ප්‍රමුඛ
see.
බැංකුව ඩිට කල කේපම් චන ගොද මතක බැංක නිසා මාසතුරතුට සෙන්ටල් බැංක් කම්පටයින් සේවත්යන එච්චර ති
Oh.
බැංක පාට මටන පුළුවන් එතර එකට
Hmm.
ඔඩිටස් ලක රස්පොන්සිබිලිට ගන්න නැදස
මෙහෙමයි ඉතින් ඔය ඔක්කොම තියෙන දැන් Enron එක see the US is rule based, no? If you consider US rule based, whereas if you consider UK or Asia Pacific countries, generally European countries are principle based. Now rule based mean Basically, that's why Nath Anderson was the auditor for both Enron and WorldCom. So they lost the certificate. Now, if you consider Satyam Computers, which happened in 2012, yes, 12. So, India Pricewaterhouse was suspended for 2 years on doing any audit work or any other work for listed entities. In 2018, their judgment was given by SEBI. SEBI mean I can't exactly remember that full name. Just like the regulator. So they were suspended for 2 years. Now in Sri Lanka also we had certain issues. Now in the Selinko also we had certain issues. No, but now in the primary responsibility lies with the board of directors and management. But secondary responsibility is there for auditors. It's how the way now in Sri Lanka, if you consider litigation against auditor is kind of rare. We don't have, but if you consider in the European region or USA or in UK, regularly the auditors are fine. So we get all this information on regular basis. Generally, auditors are fine for basically not doing the right thing. Now, if you consider FRC's Financial Reporting Council and then PCOB in US, Public Company Oversight Accounting Board. So actually, they are their reviewers are very thorough, and they do a thorough review. And if there are issues in the audits, basically they fine. But in Sri Lanka also we have Sri Lanka Accounting and Auditing Standard Monitoring Board, and they do a thorough review. But it's not to the same extent. Review is thorough. That I must tell, but it's actually in that is the way how the culture and all that. Now generally in Sri Lanka context, the litigation against auditor, and now we haven't heard no that this person members, the practicing certificate is suspended. But we hear generally that in the newspaper, the particular driver driving license is suspended, but generally we don't hear no the particular member practicing certificate is suspended or anything. So these are all, you have to consider the cultural way of happening certain things in the particular country and all that. Now generally we
Which means it seems like the auditing, the way of doing audits in Sri Lanka and the litigation limits of for the auditors is criticized in Sri Lanka. Is that they don't responsible for the such failures like golden key failure. It should have been previously identified, no? But
correct.
after golden key failure, after it went on viral, and then only everybody was looking to that matter. Was it
Correct.
been because mentioned in the audited reports?
No, basically, I'm not sure about these specific incidents, and then basically, probably if it had gone to a litigation, probably the auditors would have been cleared. If not, time in the law, judges will go by the evidence. No, if the auditor can demonstrate we have done the audit work as required under the auditing standard. But now there could be certain situation like sophisticated fraud. Even if you properly plan, the standard itself it says that even if you properly plan, so the auditor, one moment, give me a minute, right? Excuse me. Sorry, can you all hear me?
Yes, sir, we can.
Yes, sir.
Yeah, sorry, I was continuing now. It's all depends on the if the auditor is found to be the, there is a performance gap when it comes to auditors work, what is expected under the auditing standard and what had been done by the auditor, then definitely the auditor will be at will be considered as for deficient performance.
Like
But
I just I just have an confusion that all studying all these cases where the financial companies fall in Sri Lanka,
Okay.
the auditor favors the customer in that case, which means if the audited reports, it doesn't mention in that case thorough review about the corporate, they are driving into a disaster kind of a thing, which means they are biased. Is that?
Now, basically, the audit is basically a financial audit, but the audit basically the responsibility is to conclude whether the financial statements are prepared in all material respect in accordance with the applicable financial reporting framework. It is actually after the fact, conclusion. But the corporate collapse could happen. But if you consider Enron and Welcome, they definitely they have a misstatements. Even if you take Satyam Computers, the chairman himself, you know, communicated in writing the holes that were there in the financial statement. So that's basically in Sri Lanka also. If the I mean, if the whoever the party, if they can demonstrate that auditor has been unable to uh, exercise due care and to perform the audit work in accordance with the auditing standards, then definitely they will get penalized, and there will be certain sanctions against them in terms of penalty or fines, or even in extreme situation, suspension of the practicing certificate of the respective engagement partner, or even to the entire firm. But these things we have not seen in Sri Lanka, but that doesn't mean that the auditors have been biased for the respective clients or they have issued. So all that depends on the review of the audit report and the work done by the auditor. If there is a litigation or by review by the regulator. So that's my point of view.
Got it, sir. Thank you.
Right. So if there are no questions, so let me continue. Forming an opinion on the financial statement. The auditor shall form an opinion on whether the financial statements are prepared in all material respect in accordance with the applicable financial reporting. In order to form that opinion, the auditor shall conclude as to whether the auditor has obtained reasonable assurance whether the financial statement as a whole are free from material misstatement, whether due to fraud or error. This conclusion shall take into account the auditor conclusion whether sufficient appropriate audit evidence obtained. So that we have discussed whether sufficient refers to the quantity and appropriateness refers to the relevance and reliability. The auditor conclusion whether uncorrected misstatements are material, individual, or in aggregate. Now, when you do an audit, so the process is you identify risk of material misstatement and then other classes of material accounts and balances. Then you design audit procedures and then you perform audit procedures to obtain sufficient appropriate audit evidence. When you obtain audit evidence, it is not a exceptional thing. There will be uncorrected misstatement, which are found by the auditor based on the audit work performed. There could be uncorrected misstatement. Uncorrected misstatement. What do you mean by uncorrected misstatement? An error in the financial statement. Let's say, as an example, auditor has performed audit work on trade receivables and found that provision for impairment of trade receivable is understated by 25 million. That is an uncorrected misstatement. Then audit, it's not an exceptional thing. There could be uncorrected misstatement. Sometimes the auditor may conclude that the revenue is overstated by 50 million due to a cut-off issue. So this could happen. But auditor has to consider whether the uncorrected misstatements are material individually or in aggregate. If it is material, what would happen? Can somebody tell me? The first one is before expressing an opinion, auditor has to take into account whether the auditor has obtained sufficient appropriate audit evidence. So that's first one. Then auditor has to conclude whether the uncorrected misstatements are material individually or in aggregate. Now there could be uncorrected misstatement. Even the best organization you have in the organization, when an audit work is performed, we generally come across uncorrected mistake. ඒක අරුමයක් නෙමෙයි. ඒක මේ surprise වෙන්න දෙයක් නෙමෙයි. This is normal fact now in Sri Lanka when we do the audit. There are uncorrected misstatement under provision for inventories, over provision for debtors, revenue cut-off issues. Likewise, there could be many, depreciation is incorrect. Or likewise, and when we do the recorded liability test, there will be unrecorded liabilities. All that. Now, my question is, it says whether the uncorrected misstatements are material individually or in aggregate. If it is material, what you will do? Now, what is an
First of
unmodified opinion? The financial statements are prepared in all material respect in accordance with the applicable financial reporting framework. Or in other words, financial statement provide a true and fair view of true and fair view of results of operation. That means the profit or loss and state of affairs as at the statement of financial position date. That is an unmodified opinion. When you express an opinion, you have to consider three things: whether sufficient appropriate audit evidence has been obtained. That is the first one. If you have not obtained sufficient appropriate audit evidence, you have to move away from an unmodified opinion to a modified opinion. And at the same time, the auditor's conclusion about whether the uncorrected misstatements are material individually or in aggregate. If we consider uncorrected misstatements are material, then what we will do?
Modify the
we
audit
will
opinion.
First of all, we will discuss with the management regarding whether management has any possibility to reverse that effect. No matter, no
Correct.
need to any modification. So if
Correct.
they don't like to accept that auditor's opinion, definitely auditors has to modify the audit report.
Excellent. So basically, when there are uncorrected misstatement, practically what we go and if they are material, if they are not material, still you can conclude financial statement as a whole are free from material mistake. Financial statement as a whole සමස්තයක් වශයෙන් ගත් කල මූල්‍ය ප්‍රකාශන වැරදි වලින් තොරයි. ඒක තමයි කියන්නේ financial statement as a whole are free from material misstatement. If you have misstatement which are considered to be material, the first thing is you would give the option to the management. So these misstatements are there. Are you going to correct these as late audit adjustment? That's a practical way how it is happening. If they say no, we are not in agreement, we cannot now correct it, we have already presented numbers to the board, now we cannot go, then hard luck, you have to move away from an unmodified opinion to the modified opinion. So which type of modified opinion, so we will discuss in the next lecture, right? So that is the second one. Third one, the evaluation of whether the financial statements are prepared in accordance with the applicable financial reporting framework. A financial reporting framework serves for four purposes. First one is recognition of transaction and events in the books of accounts, and then from the books of account you prepare the financial statement. Then measurement initially and then subsequently. Recognition, measurement, and presentation, and then disclosure. Right? So the auditor has to take these things into account when expressing an opinion. Whether sufficient appropriate audit evidence has been obtained, the auditor conclusion in accordance with ISA 450 whether uncorrected misstatements are material either individually or in aggregate. Then the evaluation whether the financial statements are prepared in accordance with the applicable financial reporting framework. When Under third, evaluating compliance with the applicable financial reporting framework. Now, if you take a set of financial statement, you have the comprehensive income that has two parts. We call it income statement plus other comprehensive income, or statement of profit or loss plus other comprehensive income. Then you have the statement of financial position, which is the balance sheet. Those days we used to call balance sheet. Now you call statement of financial position. Then you have the statement of changes in equity. Then you have the statement of cash flows and notes to the financial statement, including significant accounting policies. That's the structure of a set of financial statement. Then the auditor has to consider adequacy of disclose of material transaction and events in the financial statement, which are to be disclosed under the applicable financial reporting framework. Then qualitative aspect of accounting practices. Now, basically, the risk management disclosures, and then the judgmental areas. Likewise, indicators of possible bias in management judgment in relation to accounting policies, accounting estimates, and other fair value accounting estimate. Adequacy of disclosure of accounting policies selected and applied. Whether accounting policies selected and applied are consistent with the applicable financial reporting framework. First one is selected accounting policies to be in accordance with to be in line with the applicable financial reporting framework. As an example, associate or joint ventures. Those days we had the option either you can follow the cost model or equity basis of accounting. Now you cannot follow the cost model; it should be equity basis of accounting. Then whether the selected accounting policies have been consistently applied. As per LK 16, as an example, entity can uh, use either the cost model or revaluation model. So, if an entity use revaluation model for its land and building, that policy is in line with the applicable financial reporting framework, which is LKS 16, property, plant, and equipment. Now, accounting policy should be consistently applied. Now, if you are on revaluation model, generally 3 to 5 years the frequency of revaluation. Or when there is a significant parity between the carrying amounts and the likely market values, again you have got to do a revaluation. Let's say if the entity is not doing revaluation, with a frequency of 3 to 5 years, then the selected accounting policy is inconsistent with in line with the applicable financial reporting framework, but has not been applied consistently. So that also the auditor has to evaluate whether the accounting policies selected and applied are consistent with the financial reporting framework and consistently applied. The accounting estimate made by the management are reasonable. Then information presented in financial statement is relevant, reliable, and comparable and understandable. So these are the three things to be considered. And the third thing, these things to be considered. So what are the three things? Auditor has to form a conclusion whether the auditor has obtained sufficient appropriate audit evidence, and whether the uncorrected misstatements are material either individually or in aggregate. The evaluation of whether the financial statements are prepared in accordance with the applicable financial reporting framework. So, in that, the auditor has to consider these things. Now, this is the standard audit report with an unmodified opinion. So, these are the things. So, I will actually go through this. The reason being, very rarely users read the audit report, but just to, uh, to go through the content and then to explain certain things. Now, you see, the independent auditors report. So even before this revision, the heading was independent auditors report. To the shareholders of ABC company, opinion. We have audited the financial statement of ABC company, the company which comprised the statement of financial position as at 31st March, let's say 2023, and the statement of comprehensive income, statement of changes in equity, statement of cash flows for the year then ended, and notes to the financial statement, including a summary of significant accounting policies. Basically, it identifies the financial statement and what is included in the financial statement. Then it says the enhancement to the auditor's report. Then you have the opinion. Say what it says is opinion first, the right hand side. The auditor's opinion, the pass or fail statement that users have said they continue to value. So they have requested transparency, insight, and enhance the communicative value. On top of all these requirements, they have said we still value pass or fail statement, which is the opinion, is required to be positioned at the beginning of the report, followed by the basis for opinion. So that's why it says, in our opinion, the company in financial statement present fairly in all material respect. So it says in all material respect. See, material. So that's why when it comes to audit, it's very important dimension. Or give a true and fair view. The financial position of ABC company and of its financial performance. Basically, financial position is the state of affairs as at the balance sheet date, and its financial performance is the results of operation. And cash flows for the year then ended in accordance with Sri Lanka accounting standard. So this provide we call is a reasonable assurance, which is a high level of assurance, but not an absolute level of assurance, right? We conducted our audit in accordance. Now, this is basis for opinion section is required, which was there even under the previous one. We conducted our audit in accordance with Sri Lanka auditing standard. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of financial statement. Auditors, that there is expanded section under the revised standard on that. So let's go through. Right? We are independent of the company in accordance with the code of ethics issued by CA Sri Lanka, code of ethics, and we have fulfilled our other ethical responsibilities in accordance with the code of ethics. Now, this is coming under what? Transparency. Two things we discuss: an explicit statement about auditors' independence and compliance with the ethical requirements. And then the engagement partner name for the audit reports of listed entities, whereas Sri Lanka has moved away from that requirements, and we provide only the engagement partners CA Sri Lanka membership now. New affirmative statement about the auditor fulfillment of independence and other relevant ethical responsibilities and requirements. So basically, it's here. We believe that audit evidence we have obtained is sufficient and appropriate to provide basis for our opinion. If it is not, then we are moving away from unmodified opinion to a modified opinion. So that's what the one of the three conditions, right? The auditor conclusion about whether the sufficient appropriate audit evidence has been obtained, right? Then key audit matters. The new section is the centerpiece of the revised audit report, which is the most significant revision. And as a result, new auditor standards ISA 701, reporting key audit matters in the independent auditor's report. So we will discuss after the break this one, key audit matters, right? Now, what are key audit matters? Key audit matters are those matters that in our professional judgment, it is based on the auditor's judgment, were of most significance in our audit of the financial statement of the current period. These matters were addressed in the context of our audit of the financial statement as a whole, and informing our opinion thereon. We do not provide a separate opinion on these matters. So these are the key audit matters, which is coming under insight. Independence and the engagement partner name coming under transparency. And then third one was readability. Put in the auditor report in a structured form. Now, other information. Now, what do you mean by, can somebody tell me what do you mean by other information? What do you mean by other information?
Those are important information, but not impact to the audit opinion, whether it is modified or unmodified. But those are important information. No need to
Yeah,
mention in the camp.
basically, other information is referred to any information other than the financial statement and audit report. If you take an annual report of a listed entity, chairman review, management commentary, corporate governance disclosure, risk management, and then the industry analysis, CEO review, all that are considered to be other information. Any information accompanying the financial statement. So that is now before this revision, what we used to do and what we currently do, there is no change. What we used to do is generally the annual report, the management basically share the annual report draft version, and we used to go through that. And if there are any inconsistent information or any information that are inconsistencies with the our understanding of the entity, we ask the management to correct those. As an example, in the chairman's review, he stated that during the year the company was able to increase the revenue by 25%. Now, as per the financial statement, in the income statement we disclose revenue. If the actual increase is not 25% but 22%, we ask the management, it cannot be, 25% is not correct, it has to be changed as 22%, so that they change it to 22%. And then we confirm the audit, annual report for final printing. So that is the process we follow. So other information refers to any other information other than the financial statement or audit report, any information accompanying the financial statement. Now, of course, under the revised standard, the same process now also we follow. Now, last week I got an annual report, the draft version, so we went through that, and there were certain changes to be done, and we actually highlighted management, and they corrected and printed the annual report. That's a normal way how it is happening. But now, to emphasize that and to enhance the responsibility, there is a separate section. So what it says, management is responsible for other information. The other information comprises but does not include the financial statement and our auditor's report. They are so excluding the auditor's report and financial information statement. Our opinion on the financial statement does not cover the other information, and we do not and will not express any form of assurance conclusion thereon. So that also, explicitly state, because we express an opinion on the financial statement, not on other information. In connection with our audit of financial statement, our responsibility is to read the other information identified above, and in doing so, consider whether the other information is materially inconsistent with the financial statement. As an example, as per the financial statement, increase in revenue from previous year 22%, but in other information CEO review, he stated that the revenue has increased by 25%, and then is materially inconsistent with the financial statement or our knowledge obtained in the audit, or otherwise appear to be materially misstated. Right? That is our responsibility. If based on the work we have performed on the other information that we obtained prior to the date of the auditor's report, we conclude that there is a material misstatement of this other information, we are required to report that fact. We have nothing to report in this regard mean basically other information is consistent with the financial statement or our understanding of the audit. So that is why we say we have nothing to report in this regard. We have nothing to report in this regard. If there is an inconsistent, then we have to report. Generally, it is not there. How it practically happen, if there are inconsistencies, we ask management to correct. In listed entities, very rarely you see anything being reported as inconsistent, because we get them to correct it. So that's why I say A separate section related to other information is required under the revised standard. The auditor's responsibility relating to other information. Now, do you think that with the revisions to the auditor standard, there is an increase in scope of the auditor in relation to other information? Is there an increase in the scope? Is there an increase in the scope in respect of other information? Can somebody answer?
So I feel basically there is no increase in the scope because they are what they are doing is they are basically just giving a disclaimer, basically an additional disclaimer saying that whatever the information given by the company is that we are not assuring that. So, but then there is no any extra work because
Yes, the scope remains same. So the scope is to read the other information, which was there even before these revisions. But now what is happening is it is put in writing. Now we have nothing to report in this regard, so it provide an emphasis or extra responsibility for the auditor to be careful than he or she was before. That's the only change. But there is no increase in scope. So scope is basically to read other information and to identify any information that is materially inconsistent with the financial statement or our knowledge obtained in the audit, or otherwise appear to be materially misstated, which there is no change. But now, as per these revisions, you have to put that in writing. When somebody, now let's say you have to communicate something verbally, and if you are to communicate something, let's say you are in your organization, you are asked to communicate certain things verbally, and or as opposed to communicating verbally, you are asked to communicate in writing. Okay, you send a mail, then of course you will take extra care, no? Because putting things in writing, it get recorded than something you are communicating verbally. So this requirement was not there to put in the audit report under the previous auditor reporting standard, but now it is a requirement. So, of course, it gives comfort to the users. Yes, the auditor has now given conclusion. Other information given in the along with the financial statement are consistent with the financial statement and the auditor's knowledge about the audit. So that is actually the enhancement. I hope you all are clear with that, right? If there is anything, you can stop me and ask, right? Then responsibilities of management and those charged with governance. For the financial statement, management is responsible for the preparation of financial statement that give a true and fair view in accordance with the accounting standard, and for such internal control as management determine is necessary to enable the preparation of financial statement that are free from material misstatement, whether due to fraud or error. So the management is responsible for two things: to prepare the financial statement in accordance with the accounting standard, and then to have a system of internal control which enable the preparation of financial statement that are free from material misstatement, whether due to fraud or error. Now, what is an internal control system? Management is responsible to have an internal control system in place. What is an internal control system? Can somebody tell me what is an internal control system?
Internal control system is to reduce or mitigate the fraud and errors in organization structure.
Yes, correct. Basically, the internal control system is a system or a process designed and maintained by the management with the oversight of the board of directors or those charged with governance, to provide it with a reasonable assurance. That is very important. To provide it with a reasonable assurance regarding three things. The first one is reliability of financial reporting. To provide it with a reasonable assurance about reliability of financial reporting, compliance with laws and regulations. Third one is efficiency and operations. Effectively, internal control address inter system of internal control address to the address the control risk. The control risk is basically your internal controls are not capable of either detecting or preventing or correcting control internal control issues in a timely manner. So that's why you have internal controls to address the control risk. What is the control risk? Basically, your controls are not either designed effectively or operating effectively in order to prevent, detect, or correct misstatement in a timely manner. So you have a system of internal control. The purpose is to provide the management and those charged with governance a reasonable assurance about reliability of financial reporting, compliance with laws and regulation, and efficiency and effectiveness of operations. Efficiency and effectiveness of operations. Three things. So to address the control risk mean your internal controls are not properly designed or operating as intended in order to prevent, detect, or correct misstatement in a timely manner. Now, my question is can the control risk be zero in an organization? Let's say the internal controls are
Never,
properly designed,
never.
operating effectively, it's superb. Can you consider the control risk of this organization? That means your controls prevent, detect, correct all misstatement in a timely manner, 100%. Can the control risk be zero?
No,
Why? Can the control risk is be zero? You say no. Why?
because all controls are handled by the human. There
Correct.
may be human errors, so some of technical errors.
Yeah, super. Basically, there could be negligence, lack of knowledge, and there are certain areas in any organization where you cannot have internal controls. Cost benefit analysis is not there. Now, as an example, goodwill arising on business combinations, right? Business combination. The requirement is you cannot amortize this goodwill. You have to test for impairment at each reporting date. At each reporting date, right? So generally organization, now if that is the case, you should have internal controls. Who is doing this impairment assessment, who is reviewing, what is the process to be followed, what method to be used, what data to be used, what assumptions to be used, likewise. But generally this happens at the year end at the request of auditor only. That's the known factor. So in that case, there could be areas within the financial reporting system without having controls in place. So that is, a natural thing. So there could be negligence. Those who are operating those controls, those who have been entrusted with the responsibility of implementing those controls, there will be lack of knowledge. There will be intentional or unintentional misstatement. So that's why it says earlier to provide a reasonable assurance. Reasonable mean high level of assurance, but not an absolute level of assurance. So the control risk of an organization can never be zero. In certain organization, it will be assessed as very high, either due to lack of internal controls or due to issues in operating effectiveness. Certain organization you would assess that as the control risk is very low, but that can never be zero. Can you remember when we discussed fraud, we discussed the management override of control? We say that the management override of control will vary from organization to organization, but nevertheless, It present in every organization, so it is a significant risk, fraud risk to be recognized. That must be recognized in each and every audit. Can you remember revenue? We say if there are low volume of transaction or simple revenue stream, you can rebut the risk of fraud risk in revenue recognition, but management override of control can never be eliminated. So it must be a significant risk, right? In preparing the financial statement, the management is responsible for assessing the company ability to continue as a going concern. So this is the requirement of LKS 1, presentation of financial statement, right? Disclosing as applicable matters relate to going concern and using the going concern basis of accounting unless management either intends to liquidate the company or to cease operation or has no realistic alternative but to do so. That's why new description of management responsibility relating to going concern intend to reflect requirement of the applicable financial reporting framework. What is the applicable financial reporting framework? LKS 1, presentation of financial statement. Those charged with governance are responsible for overseeing the company financial reporting. Now, what do you mean by those charged with governance? Board of directors or board audit committee. So it's, I mean, this part you can read and understand, right? Now, auditor's responsibility, the expanded description of the auditor's responsibilities, including key features of the audit. The auditor's responsibility section is intended to explain more fully the concept of risk-based audit approach, as well as to clarify the meaning of certain audit technical terms. This approach results in more lengthy description of the auditor's responsibilities in relation to specific matters including fraud, internal control, accounting policies, estimate, evaluation of overall presentation, structure and content of the financial statement and disclosure, group audits and communication with those charged with governance. So it is given in detailed format, right? So before it's one, shall we start at 1:45, or you want me to continue, or you want me to stop at this point and then to start at 1:45? What do you prefer?
Let's have a
Then
break
after
now,
that we
sir.
are going. Sorry.
Let's have a break now.
Okay, 1:45. Let's start. Right, sharp at 1:45. I'll start, and then we can finish the this part, and then the key audit matter, which is very important. Right.
Okay, sir. Thank you.
These chat messages are there. Please mark to attendance. Okay, that's not relevant for me. No. Okay. Arise from fraud or error and are considered material if individually or in the aggregate they could reasonably be expected to influence the economic decisions of users taken on the basis of these financial statements. As part of an audit, in accordance with auditing standard, we exercise professional judgment and maintain professional skepticism throughout the audit. Identify and assess the risk of material misstatement of the financial statement, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. So we'll understand that it provides the risk-based audit approach. The risk of not detecting a material misstatement resulting from fraud is higher than for one resulting from error, as fraud may involve collisions, forgery, intentional omissions, misrepresentation, or the override of internal controls. Obtain an understanding of internal control relevant to audit. in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the company's internal control. Now, what is that? And somebody tell me what this statement is all about. What it says is obtain an understanding of the internal control relevant to the audit, that is relevant to financial reporting. Now, there are three things now: financial reporting, reliability of financial reporting, compliance with laws and regulation, efficiency and effectiveness of operations. Now, here it says, as per the auditor's responsibility, auditor is responsible to obtain an understanding of internal control relevant to the audit in, in order to design audit procedure that are appropriate in the circumstances, but not for purpose of expressing an opinion on the effectiveness of company's internal control. So we express an opinion on the financial statement. Now, where we express an opinion on internal controls, can somebody tell me? You all follow corporate governance also, no? Subject. Have you all followed the Sarbanes and Oxley Act as part of corporate governance? Have you all discussed that? Can you all hear me?
Yes, sir, we can hear you.
So this is, if you see, under Sarbanes and Oxley Act, as part of an integrated audit, which covers the statutory audit plus internal control reporting, which we call 404 reporting. In America, for listed entities, auditor has to express an opinion on the statutory financial statement plus attestation report on internal controls. So probably the details of which you will discuss as part of your corporate governance subject. So they express an opinion on the effectiveness of internal control, whereas in Sri Lanka context, there is no requirement. We express opinion on the financial statement, but not on the effectiveness of internal control. But we understand internal control for us to design audit procedures. We understand the internal control over financial reporting and then perform certain control testing as part of our audit procedures. In America, if you consider under Sarbanes and Oxley Act, for listed entities, in addition to which is called integrated audit, which covers both statutory audit plus the internal control review, the auditor is required to express an opinion on the audit financial statement, which is called traditional financial statement on traditional opinion on the financial statement plus an opinion on the internal control, which is called an attestation report, right? So in the corporate governance subject, you will learn more about that. Then evaluate the appropriateness of accounting policies used and the reasonableness of the accounting estimate and related disclosures made by the management. As if you see in the under management also, they are required to, you know, management responsibilities with regard to going concern, and then the auditor's responsibilities ongoing concern. Conclude on the appropriateness of management use of going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists relate to events or conditions that may cause significant doubt on the company's ability to continue as a going concern. If we conclude that material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosure in the financial statement, or if such disclosures are inadequate, to modify our opinion. So you should be able to relate if this material uncertainty exists, and if disclosures are to be disclosures are considered to be adequate, then we have to give a separate paragraph called material uncertainty related to going concern. If inadequate, then we have to consider whether to issue a more qualified opinion or disclaimer of opinion, depending on the disclosure inadequacy of disclosure. I think you should be able to relate to what we discussed last week. That's why I say if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of the auditor's report. However, future events or condition may cause the company to cease or continue as a going concern. Right? Evaluate the overall presentation, structure, and content of the financial statement, including the disclosures and whether the financial statement represent the underlying transaction and events in a manner that achieves fair presentation. If you go back to the three considerations the auditor has to consider, these three, now this basically effectively covers all what we discussed, right? We communicate with those charged with governance regarding, among other matters, the plan, scope, and timing of the audit and significant audit findings, including any significant deficiencies in internal control that we identify during the audit. Now, these what I have marked, I'm not going to go through for list what is relevant for only for listed entities, but not for the privately held entity, right? So, this is report and other legal requirements. So this is Companies Act requirements we disclose. If it is an insurance company, you will have reference to the Insurance Act requirements likewise. Now you see signature in the name of the audit firm, chartered accountant, CA Sri Lanka membership number. This practice is alternative to ISO 700 revised requirement to include the engagement partner name in the independent auditor's report of a listed entity. So we included two things for transparency. First one is explicit statement about the auditor's independence and the engagement partner name. But in Sri Lanka, we give the membership number only. Just show you an audit report which I have downloaded. See, this is Palm Garden. So can you all see this audit report? It's
Yes,
starting,
sir.
right? So you see how many pages? See, it start first page. And the key audit matters related to the company. This is a group of companies, right? It goes in the group and the company, right? Certain things applicable to group, company, and group. And there could be specific to the group only. Now you see, it goes about 6 pages. Now you see, the membership number is given and the person who has signed the name, the membership number is given, but whereas as per international auditing standard you have to give the person name who is signing the audit report, that means the engagement partner name. So now you see this audit report, how many pages? 1, 2, 3, 4, 5, 6, 7 pages. How many key audit matters we are looking at from a group company point of view, company and group, and you could have even group only key audit matter. As an example, goodwill arising on business combination that is appearing only in the group financial statement. If that is material, definitely that come as a key audit matter only relate to the group. So you'll see key audit matters relate only to the company and group only. Now here 7 pages. Now there was a question. So mainly why this is 3-4 pages? 7 pages is basically key audit matters itself accommodate uh, 4 pages. And then you have all that. Now then again almost 1 page for other information and then auditor's responsibility. So that what I explained only it is there. See? So what I have marked in red color is given here. See, we also provide those charged with governance with a statement that we have complied ethical requirement. Then from the matters. So if you just go to these two. These two relevant only for listed entities audit report, right? So I hope you are clear the process basically, right? So with that we conclude ISA 700. We are moving to communicating key audit matters in the independent auditors report. Under this we should know what is a key audit matter. The thought process to be followed in determining which matters are to be communicated as key audit matters. That's the second one. What is the first one? What is a key audit matter? Then the thought process to be followed by an auditor in determining which matters are to be reported as key audit matters. Third one is what to be disclosed under key audit matters in the auditor's report. What are to be disclosed under key audit matters in the independent audit report. The fourth one is for which entities key audit matters are mandatory to be disclosed. Right? Now, communicating key audit matters in the independent auditor's report. Now, what are key audit matters? CAM are those matters that in the auditor's judgment, that in the auditor's judgment were of most significant. That is very important. Most significance means that's the highest level. In the audit of financial statement of the current period, it doesn't refer something that was more significant in the previous year. If it is not more significant in the current year, it will not come as a CAM. So few things coming out of this definition. CAMs are those matters in the auditor's judgment. It is from the auditor's judgment. So you will understand that the CAM determination of CAM may not be same from if you take particular entity, if it is done by evaluated by different auditors, there the key audit matters determined by these auditors may not be same because it is in the auditor's judgment, but fairly there is a process to be followed to ensure the consistency, but that doesn't mean that in each and every case the list of key matters determined by different auditors for the same entity could be same, right? Could be identical, right? So CAMA those matters that in the auditor's judgment were of most significance in the audit of financial statement of the current period. It doesn't refer to the previous. Key audit matters are selected from communicated with those charged with governance. So, what is the population? Key audit matters are selected from matters communicated with those charged with governance. So, we will understand the population for key audit matters selection is the matters communicated with those charged with governance. ISA 701 sets out requirements and guidance for the auditor's determination and communication of key audit matters. The purpose of communicating key audit matters to enhance the communicative value of the auditor report by providing greater transparency, insight from the auditor's point of view about the audit that was performed in addressing the audit expectation gap. Now, we are bringing into a new concept, audit expectation gap. Now, this is the population. What is the population? Matters communicated with those charged with governance. That is the population. So, can you determine key audit matters outside this? No. You select key audit matters communicated with those charged with governance. Right? First one is this is the key, selection process, thought process, which is described in ISA 701. Matters communicated with those charged with governance. Now, the question is what are to be communicated with those charged with governance? Now, these are the four things to be communicated. The auditor's responsibility in relation to the financial statement audit, plan, scope, and timing of the audit, significant findings from the audit, auditor's independence. These are the four things to be communicated by the auditor to those charged with governance, or in other words, board of directors or the board audit committee. If I ask a question, what are the stages of an audit? There are three stages of an audit. Can somebody tell me? If you take an audit, there are three stages.
Planning
First,
stage,
planning, good.
performing, completion.
Completion and issue of the opinion. The auditor's responsibilities in relation to the financial statement audit the auditor shall communicate with those charged with governance and the responsibilities of the audit in relation to the financial statement audit. Do you think under which stage of the audit the auditor would communicate this to the those charged with governance?
Planning and the completion stage.
Yeah, probably
At the
yes.
po-
Planning the completion at the conclusion stage also the auditor will communicate. Plan, scope, timing of the audit. The auditor shall communicate with those charged with governance an overview of the plan, scope, and timing of the audit, which includes communicating about the significant risk identified the auditor. Which stage we would typically communicate this with those charged with governance?
Planning stage.
Planning stage. Now, significant findings from the audit. The auditor's view about significant qualitative aspect of the entity's accounting practices, including accounting policies, accounting estimate, and financial statement disclosure. Significant difficulties, if any, encountered during the audit. Significant matters arising during the audit that were discussed or subject to correspondence with management. Circumstances that affect the form and content of the audit report, if any, and any other significant matters arising during the audit that is in auditor's professional judgment are relevant to the oversight of the financial reporting process. Now, which typically at which stage we would communicate this with those charged with governance?
At the completion stage before issuing the audit report.
Of the opinion. So probably and it could even happen if the matter is so significant during the execution phase also we would communicate something that would, it says no, circumstances that affect the form and content of the auditor's report. If you are to modify the audit opinion, probably at the earliest possible date you would communicate. Generally, it's during the completion stage or before the issue of the audit opinion, or in the certain situation during the execution phase also. Auditor statement, a statement that the engagement team and others in the firm as appropriate, the firm and where applicable, network firms have complied with relevant ethical requirements regarding independence. At which stage we would typically communicate this with those charged with governance?
At the planning.
Planning, and generally independence
Throughout the
is throughout the audit,
audit.
because certain things may come up during the audit, then you have got to communicate with, because independence, the completion stage also, at the conclusion the auditor has to communicate. But if there are certain circumstances which require immediate communication, auditor uh, may consider communicating with those charged with governance as and when such circumstances arise. So this is the sample, sorry, population from which you will determine key audit matters. So the first stage is what? Matters communicated with those charged with governance. There are four things. Then matters that require significant auditor attention. There is another subpopulation we are selecting out of this total population. What is included under matters that require significant auditor attention? Matters that require significant auditor attention in performing the audit. In making that judgment, the auditor is expected to take into account three things: significant risk and areas of higher risk of material misstatement, significant audit risk, management override of control, fraud risk in revenue recognition, or revaluation of land and building, fair valuation of investment property, impairment assessment on goodwill arising on business combination, uh, impairment assessment of non-current assets, right? So in a bank, you would consider impairment assessment on or loan loss provision on loans receivable. Likewise, you will consider significant risk and areas of higher risk of material misstatement. Then second category is areas requiring significant auditor and management judgment, including accounting estimate with high estimation uncertainty or other subjective areas in the financial statement. Can somebody give me an example? This sort of area, areas requiring significant audit and management judgment, including accounting estimate with high estimation uncertainty or other subjective areas in the financial statement. Can somebody give me an example?
when the management is providing the bad debt provision rate,
Yeah.
if auditor does not satisfy with that rate, definitely we have to discuss with
Yes.
management.
Now, if you take a
In addition to
normal,
that, in addition
sorry.
to that, inventory provision also, it is one of the
Yes.
important one.
Correct. Correct. Now, as an example, now the bank, the provision info in the loan loss, okay, the loans receivable is a very significant area because you have to follow the general approach. 12 months credit loss, likewise lifetime is a very significant process which require management judgment in terms of the model or the method to be used, assumptions to be used, data to be used. But for a you know a trading organization may not be a very significant area. You have trade receivables. And another company, if you take Singer or Abans, the provision for warranty claims, which is a significant area because there is no generally accepted model or method to be used. It depends on entity specific model. The data you will use, probably the data relate to the previous year's warranty claims, and then assumptions. So all that. So it depends on the organization to organization, industry to industry. So let's say impairment assessment of goodwill. The purpose is not to increase the value of impairment, good value of goodwill, but to consider whether the goodwill has suffered an impairment and then whether I should write it down. Goodwill arising on business combination. The applicable standard is LKS 36. So these areas are matters that require significant audit attention. Other one is significant events or transaction that occurred during the current year. Here basically we are considering unusual transactions, unusual either due to size or nature. Then non-recurring transaction or transaction with related parties. Can somebody give me an example? Unusual or non-recurring? Unusual either due to size or nature. Then non-recurring transaction. Now recurring transaction, your revenue is a recurring transaction. Expenses are recurring transaction. Payroll
Example for
processing.
the
Yes.
example for the non-recurring transaction is bonus provision.
The bonus is actually a recurring
And
transaction. Now it is not a there is no legal obligation by the organization to pay bonus, but it is now considered as a constructive obligation. But people expect bonus. There is no legal obligation is to pay salary. No. Now, if there are situation now during the COVID period, most of the organization didn't pay bonus. No. There is no. But bonus is how it works. You have a rating, and based on that rating, 1 month or 2 months, so which is not a very significant, no, non-recurring or unusual transaction. Generally the organization make provision for bonus. Now, can you remember about couple of years ago, Singer was acquired by Haley's. Singer Sri Lanka was acquired by Haley's. That is a significant event or transaction. It is a non-recurring unusual transaction. Singer was acquired by, then very recently, no, last year, LOIC Group acquired controlling stake of Sierra Group. That type of transaction. That is what is a significant events or transactions that occurred during the current year. As an example, selling a division of the organization to another firm, or discontinuing operations of a SBUs at a division of the organization. Generally, those are considered to be significant events or transactions that occurred during the current period. So these are the things which come under matters that require significant audit attention. But these are not key audit matters. And so we have the main population, the total population, then we have identified subpopulation out of the total population, which include three things. significant risk and areas of higher risk of material misstatement, areas requiring significant auditor and management judgment, including accounting estimate with high estimation, uncertainty, or other subjective areas in the financial statement, significant events or transactions that occurred during the current year, which basically focused on unusual transaction, unusual due to either due to size or nature, and then non-recurring transaction, acquisition of a business, disposal of a business, and discontinuation of a major business line of the organization, or selling of part of the business to another party. Likewise, then, out of this, matters of most significant in the audit. Out of these three are not key audit matters, and from this, based on the auditor's judgment, auditor has to determine what matters are most significant as far as the current year audit is concerned, which is actually key audit matter. Now, come are those matters that in the auditor's judgment were of most significance in the audit of financial statement of the current period. So, key audit matters are selected from matters communicated with those charged with governance. So, that is what effectively matters communicated with those charged with governance is a filtering process. So, this is the total population out of which we identify matters that require significant audit attention. There are three categories, and that doesn't mean all whatever comes under these three categories will be treated as uh, key audit matters. As an example, we know management override of control is a significant risk that must be recognized in each and every audit. But very rarely, management override of control comes as a key audit matter in the auditor's report. I will show you one or two audit reports and some examples also. Nowhere we have disclosed, we have considered management override of control as a significant management override of control as a key audit matter. It is from the auditor's professional judgment. Matters of most significance in the audit. So we should be now clear what is the key audit matter and the process to be followed in determining which matters are to be communicated, which matters are to be considered as key audit matters. So please be very familiar with this slide as well, right? Now this is the point. Starting population, all matters communicated with those charged with governance. The determination of matter that requires significant audit attention in performing the audit, which is the second category, right? Then third one, out of which then permission to carve out sensitive matters. Now carve out in extremely rare circumstances. Now if there are, now what is the purpose of disclosing key audit matters? It's to increase the communicative value, transparency, and to provide insight. But there could be situation public interest benefits achieved. The negative implication arising from disclosing key audit matters will outweigh the public interest benefits expected from disclosing key audit matters. In very rare circumstances, as an example, there is a investigation on money laundering by the organization. If you disclose that in the auditor's report, you have to disclose everything that may, those are considered to be sensitive matters, and it might impact the ongoing investigation. So the standard recognized under very sensitive, very rare circumstances, certain sensitive matters, even if the auditor considered as key audit matters, may not be disclosed given the situation.
Excuse
Are
me,
you
sir.
familiar with such process? Yeah, please go ahead.
සර් ඔඩිට් එක පොපුලේෂන් එක වෙන්නේ ඕල් මැටර්ස්ට නැතන් ජීල් ඩම්ප එකද
I'm not clear with your audit taker.
ඔඩිට් එකස පොපිලේෂන් එක කියලා ගන්නේ ඕල් මැටර්ස් කියන කන්සෙප්ටේද එම නැත්තං ජීල් ඩම්ප එකද
නෑ නෑ ඒ අපි ඔඩිට් ටෙස්ටිං කරනකොට තමයි GL ඩම්ප් එක ගන්න. මේක ඇවිල්ලා රිපෝටින් පොයින්ට් ඔෆ් view. Now, audit කරනකොට ඔයා consider කරනවා under risk-based audit approach certain things. Now, audit එක population එක කියලා කියන්නේ basically the financial statement. Financial statement එකට අදාළව you have different areas and then you consider the population for selection of sample. That is a different one. That is for testing purposes. Either control testing or detailed testing, substantive audit procedures. Now, here, when it comes to reporting in the audit reports, we consider matters communicated with those charged with governance, and then again, so as far as the audit is concerned, these three areas, and out of which only we consider most significant matters as key audit matters. But this is from reporting point of view, but GL dump is considered basically transaction no balances. Now let's say revenue, GL dump would be the revenue listing, invoice wise listing. That is for testing purposes. But this is for reporting purposes in the independent auditor's report. I don't know whether I have answered your question or whether I have
Yes,
understood
sir.
your question correctly.
Understand, sir. Understand. Thank you, sir.
Any other questions?
Sir, with regards to these matters communicated to those in charge with governance, now can we say, sir, now whatever the issues or the matters mentioned in the letter of representation, can we assume the same that can we assume those whatever the aspects mentioned in the letter of representation as the population, sir? Because generally, whatever the important items are mentioned in the letter
The
of
matter now,
representation.
if you take the letter of representation issued by the management, which is as per 560 standard, as my memory is correct. So basically, that provide an additional, evidence. The letter of representation itself is not considered as sufficient appropriate audit evidence. In that auditor, the management has to give certain representation which provide additional comfort. But in that, you will not consider the significant risk, no, and all that, no. So that is from the auditor's point of view. Auditor understand the significant risk and the areas requiring higher, significant attention than non-recurring transaction. But the letter of representation or management representation letter, there is a template. Generally, they will assume the responsibility for certain areas.
Hmm.
It is, but it will not it cannot be considered the total population. Certain things which we discuss under this, under four headings here, are not being included in the letter of representation. As an example, significant difficulties encountered during the audit,
Yes.
that is not disclosed, right?
Hmm.
Significant matters arising during the current year were discussed. Then auditors view over the significant qualitative aspect, circumstances that affect the form and content. So likewise, those things are not there basically. See, which under second, the auditor shall communicate with those charged with governance and overview of the plan, scope, and timing of the audit. Basically, audit strategy and audit plan, which
Yes.
include communicating about the significant risk. Now, in the management representation letter, significant risk are not given. That is from the auditor's point of view. Is an from the internally audit identify under risk-based audit approach and design audit procedures which are responsive to the identified risk of material mistake.
Hmm.
So these things basically is considered to be the population. So that's why if I will go back to now the first one. See, these things enhance communicative value to the users. More robust interaction and communication among users, auditors, and those charged with governance. Because if you don't communicate something with those charged with governance, then you cannot consider that as a key audit matter, because your population is matters communicated with those charged with governance. Then increase attention by management and those charged with governance to disclosures referred to in the key audit matters. So that's why uh, it increased the communication between auditor and the users and those charged with governance. So that the population is basically population is matters communicated with those charged with governance. Then, out of which we consider three things, which are considered to be matters that require significant auditor attention, and then of which it's auditor's professional judgment. But you cannot have major deviation if the same entity is evaluated by different auditors. It is accepted that the key audit matters may not be identical, but you have to have some consistency. That's why the standard provide this, what do you call, this thing. Are you all clear with what we discussed up to now?
Yes,
They
sir.
are going to now the purpose of this reporting key audit matters is to reduce the audit expectation gap. So let's discuss that also. The earliest reference to an expectation gap in audit dates back to 1974 academic paper. So it's, basically in that the difference between the level of expected performance. What do you mean by level of expected performance? Level of expected performance. Sorry, the expected performance as envisioned by the independent accountant and by the users of financial statement, that in 1974. Then there is another definition, the difference between what the public expect from the auditing profession and what the profession actually provide. Now this is it can be defined as the expectation gap in audit is the, in broadest terms, the possible as the difference between what the general public thinks auditors do. That is here. What the public thinks auditors do. What the public thinks auditors do. Then, and what the general public would like auditors to do. What the public want auditors to do. This is the gap. Now, if you consider the audit expectation gap, there are three things. Starting what the public thinks auditors do, and what the public wants auditors to do. You have knowledge gap, which is we call unreasonable gap. What is the knowledge gap? What the public thinks auditors do, what auditors actually do. Let's go to that. Knowledge gap. The knowledge gap is the difference between what the public thinks auditors do and what auditors actually do. This recognizes that the public can sometimes misunderstand audit. For example, the extent to which auditors are responsible for preventing company failure on the restriction on the auditor of an entity from selling non-audit services to that entity. Historically, the knowledge gap may have been used by some in the profession to resist change by depicting the problem as being due to public lacks of understanding rather than being a legitimate concern. The existence of knowledge gap does not invalidate calls for auditor to do more, nor does it explain or excuse the performance gap. Now, what is the knowledge gap? Oh, unreasonable. What the public thinks auditors do, public may think the auditors check 100% of the transaction. An auditor, the audit report giving a true and fair view means the financial statements are correct. Then what auditors actually do? Now, our audit is based on risk-based audit approach, it's sample-based and all that. So, knowledge gap or unreasonableness gap, which is actually due to lack of knowledge. Then we have the performance gap. What auditors actually do and what auditors are supposed to do in line with the auditing standard or other regulations applicable. This is purely performance gap. Lack of performance. Lack of performance, right? What it says, the performance gap focuses on areas where the auditors do not do what auditing standard or regulations require. This could be because of insufficient focus on audit quality. Now, if you see the first one, knowledge gap, it's actually the lack of knowledge by the users or the public. What public thinks auditor do and what auditors actually do. Then performance gap comes what auditors actually do and what auditors are supposed to do in line with the applicable auditing standard or professional standard and other regulations that are applicable in the context of an audit. So this is auditor's issue. This is basically user's issue, right? The performance gap focuses on areas where auditors do not do what auditing standard or regulations require. This could be because of insufficient focus on audit quality, the complexity of certain auditing standard, or differences in interpretation of auditing standard or regulatory requirement between practitioners, and regulators. Audit firms are required to establish systems and processes to ensure quality in their engagement. As part of these processes, audit regulators regularly review files of completed audit engagement to monitor that quality is being achieved. Now, in Sri Lanka, who does this review of the audit files? Can somebody tell me? In UK, Financial Reporting Council. In USA, PCAOB, Public Company Oversight Accounting Board. In Sri Lanka,
Slash
which
MP.
organization?
Slash
Sorry?
MP. Slash
Slash
MP.
Sri Lanka Accounting and Auditing Standard Monitoring Board. They ask us to come, and so we go. The engagement partner and manager go with the audit file, and some audits actually review takes 2 3 days even, right? So this is performance gap. Now, what do you mean by performance gap? What auditors actually do and what auditors are supposed to do. That is auditors' problem. This is users' problem. So that's why. Then third one, evolution gap. Now you cannot have same set of standard. The audit profession should evolve. The evolution gap exists in the areas of the audit where there is a need for evolution, taking into consideration general public demand. Now, why the auditor reporting standard were revised? Because there was a requirement from users. We don't want just a fast or fail statement. We want something from the auditor's point of view, what were considered as most significant, and how you address those matters in the audit. It's actually increasing the communicative value, transparency, and providing insight from the auditor's point of view, not from the management point of view, right? So that's what it says. Taking into consideration the general public's demands, technological advances. Now we are talking about the digitalization of audit processes, next generation audit. So, right, we will have a separate session on that. Technological advances and how the overall audit process could be enhanced to add more value. Addressing the knowledge and performance gap is, however, an important step in determining what's need to evolve in audit. Now, how do you address the knowledge gap? Can somebody tell me how do you address the knowledge gap? Now, what do you mean by knowledge gap at first place?
So through educating the community,
Educating community. How are you going to communicate the community?
that is through the professional bodies or the accounting firms.
Okay, so you have to enhance the education quality of the universities or professional organization. So basically, then only the users and then get users to refer to the financial statement, right? What else we can do? Because with the knowledge gap, it's very difficult because always the auditor will try to shift the basically the performance gap to the knowledge gap, because the issue is actually their issue, not our issue. So you have to revise the improve the education in the the professional level and the academic level, and then to make whatever the changes. That's why even the including key audit matters and enhanced audit report is to address, one is the knowledge gap and then the poor performance, right? So that's why it says addressing the knowledge and performance gap is, however, an important step in determining what's need to evolve in an audit. Unless otherwise you address the knowledge gap, basically the knowledge, increase, enhance the knowledge of users to make them understand this is the role of the auditor. This is what they do. They don't do 100% testing. They do sample basis. They focus on significant areas. They never express an opinion that the financial statements are correct. They express an opinion on true and fair view, which is a high level of assurance but not an absolute level of assurance. Then the other side, to improve the audit process of organization, to improve the monitoring mechanism within the organization and by the regulator. So that is to address the performance gap. This will help to avoid over-regulation and inappropriate development in auditing standard, when the real problems could be lack of knowledge, that is knowledge gap or poor performance. Understanding the difference between the knowledge and performance gap is vital and is particularly important before assigning responsibility in times of crisis, such as when corporate failures occur. So are you all clear with what I explained on this? So basically, including key audit matters is the expectation is to reduce the audit expectation gap. One is to reduce the knowledge gap and also to address the performance gap. Are you all clear?
Yes, sir.
Right. Now, benefits. Communicating key audit matters in the independent auditor's report, how it helps to address the audit expectation gap. Benefits of disclosing key audit matters. The principal reason for disclosure of CAM in the independent auditor's report was to provide increased transparency in response to requests from users of the financial statement for more information in relation to significant judgment made by both management and the auditor. This should lead to increased focus on the uncertainties created by judgment in the reporting process and help to improve users' understanding of the financial statement. This in turn will serve to increase confidence in the audit process and the perception of audit quality. The audit expectation gap is the difference between the actual role of the external auditor and the role which the public believes the auditor performs. In this context, the inclusion of CAM within the auditor's report represents an important step in the process of informing and educating the public about the auditor's role, evaluating the high risk judgments, and significant events or transactions which occur during the period. Furthermore, auditors are expected to discuss how they address scam during the course of the audit and the provision of details in relation to the procedures performed will also go some way to provide greater transparency on how the audit is performed. Difficulties in communicating come in the auditor's report. The determination of which audit matters to report as key is subjective and require auditor judgment. So, can you remember the definition of auditors? Definition of key audit matters. As a result, this may reduce the consistency and comparability of auditor reporting. In order to assist with this, ISA 701 provides a decision-making framework to help auditors to determine which matters are kept. What is the decision-making framework? As somebody tell me a little while ago, we discussed what is the decision-making framework we need to follow to determine which matters are to be considered as scam. Can somebody tell me what is the decision framework we need to follow or thought process we need to follow?
Whatever the issues communicated to the people in charge of government, sir.
Yeah, first population is matters communicated with those charged with governance, out of which we have to identify matters that require significant auditor attention. There are three things: significant risk, and matters requiring attention, and then second one is the matters which require significant judgment, including accounting estimate, and then non-recurring transactions, and then unusual transaction. Those three, and out of which only you have to determine which matters are to be communicated as key audit matters. So that's why. So, but it's again, is professional judgment could be subjective, but the to minimize the inconsistency or the subjectivity, the standard provided decision making framework. So this is the decision making framework. The decision making framework, right? So this should help reduce ambiguity කියන්නේ ව්‍යාකූලතාවය, and promote consistency across audit. The inclusion of CAM in the independent auditor's report may lead to significant increase in the volume of detail contained in the audit report, thereby obscuring which matters are of more greater significance. So I show you an audit report about 6 to 7 pages. This increase in volume may deter users from reading the auditor's report in full and therefore undermine its role in closing the audit expectation. Because if users are not reading the audit report, then there is no point. We will never be able to address the knowledge gap and also the performance gap, and then to consider what what evolution is required in the audit profession. There are some concerns that the lack of specific guidance may lead to standardized boilerplate disclosures, which add little value to the auditor's report, right? Now, CAM are required to be communicating the independent audit report for audits of financial statement of listed entities in accordance with ISO 7 that we discussed. Law regulation may require CAM for audit of entities other than listed entities, which are considered to be public interest entities or public sector. Let's say there are NGOs which are receiving funding from the overseas governments, or the overseas governments basically grant funding which they collected through taxes or by other means. So that is public money of that country. So in that case, may consider that it's a public interest entity or public sector entity, then will require uh, to be reported, come to key audit matters to be reported in the audit report. But mandatory requirement as per the auditing, the ISA 701 is to report in listed companies audit report. Auditors may voluntarily or at the request of management or those charged with governance communicate CAM in the auditor's report for entities other than listed entities. CAM is prohibited for disclaimer of opinion. So last week I high level explained disclaimer of opinion mean we are not expressing an opinion. In that case, there is no point of having CAM. But required for qualified or adverse opinion. So once we discuss these, different types of modified opinion, we will understand this part. Now, disclaimer of opinion mean auditor is not expressing an opinion. In that case, there is no point of giving CAM. But qualified opinion or accept opinion or adverse opinion, which is right opposite of unmodified opinion, you have to have CAM being reported. In certain limited circumstances, there may not be CAM to be communicated. If the auditor is entity is a very straightforward entity, then of course in very rare circumstances we will not, the auditor may consider that there are no CAM to be reported, but under very rare circumstances auditor is required to include each CAM unless law regulation preclude disclosure. In extremely rare circumstances, the auditor determined that the matter should not be communicated. Adverse consequences of communicating the CAM would reasonably be expected to outweigh the public interest benefit of such communication. So that's why the sensitive matters which we discuss. This one, permission to carve out sensitive matters, right? This is a complex decision and involves significant auditor judgment. Accordingly, the auditor may consider it appropriate to obtain legal advice. That is, when auditor, for based on the sensitivity, if auditor is carving out certain key audit matters which are considered to be CAM, but due to this reason, if the auditor is not going to disclose, that's why I say this is a complex decision and involves significant auditor judgment. Accordingly, the auditor may consider uh, it is appropriate to obtain legal advice. Now, these are the certain areas there will be CAM: going concern assessment, property valuation, either evaluation or investment property fair valuation, revenue recognition, disposal of a business unit, effect of new accounting standard, as an example, adoption of SLFRS 16 lease standard, which may be a CAM for a telco company. Now, telco companies, they have small lands being leased out to construct the towers in throughout the country. So, adopting SLFRS 16 would be very significant as far as telco company is concerned, as opposed to a company which has a lease of one land. So that sort of a situation, that's actually the professional judgment. Then business combination and accounting impacts, impairment assessment of assets, deferred taxation, valuation of financial instrument, particularly the privately held entities investment in privately held entities, provision for contingencies, measurement of retirement benefit plan liabilities, IT environment and control deficiencies, inventory valuation, goodwill impairment, goodwill arising on business combination, Now, generally, the standard recognize these areas there will be CAM, but that doesn't mean that it depends on the entity to entity, industry to industry. Now, as I explained, SLFR 16 probably would be a CAM for a telco company which has got lease land throughout the country to construct towers, but may not be for a company which has leased out land from Board of Investment of Sri Lanka for 99 years. They have just one land. It will never be a key audit matter, right? Now we discuss what is the thought process and what is a key audit matter. Then third one is what is included in the description. Now, when you be, what do you mean by in the description? That is, once you determine these are my chems to be reported in the independent audit reports, three things to be disclosed. First one is why the matter was considered to be a chem. Why the matter was considered to be a CAM, how the matter was addressed in the audit, and reference to the related disclosure, if any, in the financial statement related to the particular key audit matter. What are the three things? You can dhammam paadam karagannu පුළුවන්. Why the matter was considered to be a CAM, how the matter was addressed in the audit, reference to related disclosure, if any, in the financial statement in relation to the particular camp. So the second one is how the matter. See, the description of how the matter was addressed in the audit may include aspect of the auditor response or approach, brief overview of the procedures performed, indication of the outcome of the audit procedures, key observation with respect to the matter. Now, reference to the related disclosures. Now, this is not boilerplate language or standard language. You have to specifically explain why the matter was considered to be a CAM as far as the particular audit is concerned. How the matter was addressed. You cannot just say we perform control testing and substantive audit procedures, which is not the expectation. That is standard boilerplate language. Then third one is reference to the related disclosures, right? CAM points to note. So you can go through. I'll just go to this is key audit matters and illustration. Now, what three things to be disclosed? Goodwill impairment. Why the matter was determined to be a CAM, how the matter was addressed in the audit, reference to related disclosure. Just read it out. Under the IFRS, the group is required to annually test the amount of goodwill for impairment. This annual impairment test was significant to our audit because the balance of so much as of 31st December 2000, whatever, is material to the financial statement. In addition, management assessment process is complex and highly judgmental and is based on assumptions, specifically which are affected by expected future market or economic conditions, particularly those in, let's say, Sri Lanka or India. That is basically the first one. Why the matter was considered to be a CAM. Then how the matter was addressed in the audit, not standard boilerplate language. Our audit procedures included, among others, using a valuation expert to assist us in evaluating assumptions and methodologies used by the group, in particular, those relating to the forecasted revenue growth and profit margin for whatever the business line. We also focus on the adequacy of the group disclosure about those assumptions to which the outcome of the impairment test is most sensitive. That is, those that have most significant effect on the determination of the recoverable amount of goodwill. This is how the matter was addressed in the audit. That's second one. Refer to the related disclosure, if any, in the financial statement related to particular key audit matter. The company disclosure about goodwill are included in note text, which specifically explain the small change in the key assumption used could give rise to an impairment of goodwill balance in the future. Right? So this is key audit matters Palm Garden Hotels PLC 31st March 2020. Recoverability of investment in subsidiaries. This is at the company level. So I'm not going to read out, right? The three things: why the matter was determined to be a CAM, how the CAM was addressed in the audit. So this is specific audit procedures, not boilerplate language. Third one, refer to the relevant disclosures. We assess the adequacy of companies' disclosure in notes 3.2 and 15 to the consolidated financial statement regarding the disclosure related to accounting policies and judgments. Right? This is John Keel sold in PLC 31st March 2022. Recognition and measurement of group revenue. Right? Then this is TJ Lanka PLC 31st March 2022. Valuation of inventories. This is, sorry. Now you will understand these things. So are there any questions before I go for the practice questions? Anything you want to clarify? So under key audit matters, what is a key audit matter? Decision making framework to be followed. Then what is to be disclosed under key audit matters? There are three things. Why the matter was considered to be a CAM, how the matter was addressed in the audit, if reference to disclosure, if any, in the financial statement related to the particular key audit matter. Those three. And then we discuss the role of key audit reporting key audit matters in the in the independent auditors report in reducing the key audit expectation gap. So we discussed three things: knowledge gap, what public things auditors do and what actually auditors do, knowledge gap. Then performance gap. Then audit evolution gap. Then we discussed benefit of reporting key audit matters and difficulties in reporting key audit matters, including challenges. Anything you want to clarify before I go for the practice questions?
Sir, sir,
Yes.
now say for example, there are situations with regards to inland revenue tax assessments, sir.
Yeah. Yeah.
Sometimes they send it and then, sir, now company will have to respond to that. So there could be
Correct.
justification from the company sides also. So when
Correct.
auditor comes, they now we have to, what about this? It's a, now we have to, now whatever the outcome, though there's a justification from the company side,
Hmm.
it's at that at the point of the audit period or during that particular financial year, we are not in a position to give them an exact answer even to the auditors. So if
Correct.
it is the case, how the auditor should respond and what is the responsibility of the management with regards to this, sir?
Now, if there are tax assessment, there is a process to be followed. So you have the board of review or board of appeal or something within the inland revenue. And then if the decision is not in favor of the company and the audit, the management is not in agreement with that decision, they can go to court. So it's a detailed process. So as per now, no, it's basically as far as the tax assessment are concerned, as far as the audit is concerned, we would ask the relevant correspondence with the Department of Inland Revenue, and also we would get the representation from the tax consultant who is advising to the company with regard to this tax assessment. It is a contingent liability as per LKS 37 provisions, contingent liabilities and contingent assets. So it will only be a disclosure in the financial statement, right? So because there is a long process to be followed before a liability is crystallized or to meet three, there are, if you want to recognize a provision, there are three conditions that must be met before a provision is recognized. Three things is actually there should be a present obligation as a result of past event, and then the resources are required to settle that obligation, and then the amount of obligation can be reasonably measured. Then only you will recognize a provision. Until that point, it is not a liability or a provision, it is a contingent liability. Tax assessment, you recognize only you disclose that part of as part of the contingent liabilities, provided the claim, the assessed amount is significant. So, from the auditor's point of view, they would ask for the relevant details related to the tax assessment, and then the now there is anyway a tax consultant who is advising or representing on behalf of the management. So generally, we used to get a confirmation, oh, status report from that person. What is the current status? What is your personal assessment with regard to crystallizing a liability? So that is what effectively we do in an audit, just to to get the comfort. But if this amount is so material, it's very significant as far as this contingent liability. Probably the auditor may consider that to be reported as a key audit matters if that falls within the scope of, in the auditor's judgment, matters a matter that requires significant auditor most significance as far and considered to be as most significant as far as the current year audit is concerned. But from the audit point of view, for a contingent liability, there will only be disclosures if the assessed amount is material. Are you clear with what I explained?
Yes, sir. Yes, I got it. Thank you, sir.
So, any other clarifications? So, these are the practice questions. Which four key enhancements the auditor's report? State what a key audit matter is and explain the decision framework to be followed in determining which matters are to be communicated as CAM. State what is required to be disclosed in communicating CAM in the auditor's report. Can somebody tell me what is required to be disclosed in the CAM in the independent auditor's report? There are three things. What are three things? Can somebody tell me three things are there to be disclosed under CAM? Why the matter was considered to be a CAM, how the matter was addressed in the audit, reference to any disclosure in the financial statement relevant to that particular key audit matters. Then ISA 701 communicating key audit matters in the independent auditor's report says that the purpose of communicating key audit matters is to enhance the communicative value of the auditor's report by providing greater transparency about the audit that was performed. Critically evaluate this statement in terms of benefits and difficulties of communicating key audit matters to users of the independent auditors report, how the ISA 701 helped the auditors in addressing the audit. It addressed two things, right? Benefits and difficulties, and then addressing or reducing the audit expectation gap. So this is basically we are talking about this area, right? This you have to relate to this and this. This is basically the answer. So these are some of the practice questions. So you can practice list four key enhancement, and there are many enhancement. State what is a key audit matter. Explain the decision framework. So what is a key audit matter? Some are those matters that in auditor's judgment were of more significance in the audit of financial statement of the current period. Key audit matters are selected from matters communicated with those charged with governance. So this is the decision-making framework. So I mean, if you explain, you don't want to explain in detail as per those matters communicated to those charged with governance. There are four things: the auditor's responsibilities in relation to the financial statement audit, plan, scope, and timing of the audit, significant finding from the audit, auditor's independence, and based on which auditor has to consider matters that require significant auditor attention and that include significant risk and areas of higher risk of material misstatement, and then this one. And based on that, auditor has determined matters of most significant in the audit of current period financial statement which are treated as key audit matters and are reported in the independent auditor's report of listed entities. That is basically the decision making framework. Any questions before I wind up? Are there any questions? Can you all hear me?
Yes, sir. Can hear you, sir.
If there are no questions, we can basically wind up the session today. Okay, thank you very much for your time. So I will basically conclude the session. So we'll see you in person next week.
Thanks, sir.
Okay,
Thanks,
sir.
sir. You
Thank
can
you, sir.
upload the
Thank you very
slides
much.
and the recording, sir, please.
So I didn't do the recording. I have sent the material to Kalhari.
Okay, sir.
Actually, I
That
sent
is
it today morning. Actually,
Yeah, yeah, done the podcast.
so the recording has been done by. So who is doing
I have
recording?
done, sir. I have done that.
Ah, right.
all right.
All
Okay.
right. If you could upload it, I mean, you can refer. Any questions you can ask from me next week because I'll be in the university next week. Right?
Okay. Thank you, sir.
Okay. Thank you.
Thank
Thank
you.